Hey guys, Boris Last from BK Forex. Welcome to our Forex Daily Technicals for 925. 13 key levels in FX. As always, trading foreign exchange or margin carries a high level of risk in every single for investors. I ask you to read this disclaimer very carefully to understand all the risks associated with trading a margin. Seek advice from a financial advisor if you have any doubts. Well, I think let's start with the euro because in many ways it was the most interesting. What we're basically seeing across the board, in my opinion, is essentially a. Let me just make sure I have all this correctly done. There we go. Put this inside the screen so you guys can see everything properly. Um, what we have right now going on, in my opinion, in FX is simply the give back, at least part, perhaps even all in some ways, of the post-Fed rally in the anti-dollars. We've had this for 3 or 4 days. We've basically stalled out above the 35s, and now today, as you can see, we're starting to crater, come back in, pretty much finishing on the lows in the euro as we come in. The euro a little bit heavy because PMI was weak yesterday, IFO was a little bit weaker today, all suggesting that the recovery in the eurozone is starting to hit a little bit of a headwind. And with 135 euro, that's certainly not going to help things a lot, which is why you're starting to see a little bit of profit taking. On the other side, also the fact that U.S. may be able to avoid the debt fiasco and the DC wars gives it a lot of impetus here to want to see some profit taking. Clearly, a lot of shorts ahead of this 35.50. Starting to press on the trade. The key support level here at 34.50, you need to hold that. If we don't hold the 50s, that potentially opens up a way for a run all the way out to 33.50, which was the breakout zone. So you would essentially erase pretty much most of this breakout, and then we'll have to see how it consolidates after that. That seems to be a very likely scenario. For now, the top side really doesn't come into play till above 35.75, so we need to see that broken before you can get an upward bias. It's essentially a corrective phase with a potential of a breakdown. Is how the euro shapes up for this for the time being. Dollar yen, just treading water, but also not looking great. I mean, we held 98.50s, bounced off of that, but not exactly a resounding bounce off of it. 98.50 still continues to be a pretty key level here. If we can consolidate for a couple more days, it may provide us with some impetus for a dollar move forward. But still, it's very, very tight range. It's basically 98.50 to 99.50 consolidation. Break to the downside opens up a test of 98. Top side opens up a possible retest of the 100. But so far, very little activity. It looks like yen, one of the interesting things is if you sort of look at the longer term pattern of yen, is vol starting to really come in. Big wave, smaller wave, smaller wave, and we'll have to see if if we sort of consolidate to a volatility point, then possibly break out one way or the other. It feels like there's just no activity going on in dollar yen. We're back to the dead. Pound dollar holding up better than the euro, but still also in very much that corrective post-Fed phase. 60 still holds, but 60 given opens up a possibility of 59. We sort of stopped right ahead of the 59.50s, but I think 59.50 may be tested again, and that opens up the real test of the 59, which is the big support area here. Have to see how well that holds out. To the top side, it doesn't really get interesting till 61.50. So that only then do you have a resounding upward move and a potential for a momentum break. Aussie doing nothing. It kind of faked out to the downside, faked out to the upside, still consolidating. Again, here the level's 99, 95.50 to the top side, and to the bottom, we're still above, basically within 93.50, 9400, kind of holding this pattern. But a break below 93.50 really does open up sort of a test of this 93, which is the key breakout level. I think it's going to be a deeper support for the Aussie. What you see pretty much across the board in all the anti-dollars is this kind of a slow but steady, inexorable distribution. It may change as the week goes by, but so far you see volatility very compressed, short profit taking. Basically, in absence of any positive news, you're getting profit taking and negative flow to the downside. Done too much data on the calendar this week, so it's really going to be very much rhetoric driven. We'll have to see if there's any more volatility as the week progresses. Lastly, the biggest loser today was actually Kiwi, which got shellacked. Look at that correction. Got really crunched all the way through the 83s, went all the way down to almost 82.50 on a test, and kind of suggests the possibility of a move towards the 8200 on a retrace. We do have trade balance in front of New Zealand today, so that could be interesting to see if it pushes things down. Otherwise, that's pretty much how things stand. It's a profit-taking first few days, and it looks like the direction for the time being is to the downside on all the anti-dollars. Wish you guys the best of luck, the best of trading. This is Boris Schlossberg for BK Forex. Over and out.